Hello, good evening and welcome. And today the topic is strengthening the economy through insurance. An African Trade Insurance Agency is a company that's doing something different within the whole of Africa. Now, they are insuring investment against political risk and big insurances basically within Africa, so that if you brought your investment here, you don't lose it. Now, the question then becomes, does it mean that the continent is so risky and that you shouldn't take business there? Or is it the normal common sense that, well, I'm taking business there and in fact I need insurance? But what is the intriguing part is the political insurance. Because you and I know that time and time again we hear companies saying that, oh, because that government left power, my business collapsed. In that case, will they be insured? And they started from Kenya. And then we all know of the Westgate saga. So if indeed it started from Kenya and there's a Westgate saga, did they help? And how much did they help? I'm going to go for a break, and when I come back, we're going to find out how you protect your investment in another country. How does this whole thing work? My name is Nana Sakwa, and this is PM Express. Hello and welcome back. Strengthening the economy through insurance. And with me is the CEO of African Trade Insurance Agency, and he's Mr. George Otieno, who's the Chief Executive Officer. George, welcome.
Thank you, Nana. I'm happy to be here.
Very good. George, I've read through your company profile and everything, and I'm thinking, that's intriguing. But first of all, primarily, what is African Trade Insurance Agency?
African Trade Insurance Agency was set up in 2001 by African member states, actually from the COMESA region. There are 7 countries, I think mainly Kenya, Uganda, Tanzania, Malawi, Zambia, and one other. Then they moved on to 9 countries, including Madagascar, and the DRC joined later. Of course, the vision was to set up an organization which would because Africa was perceived as a risky destination for investment, and investors were shying away from coming to Africa. So it was foreseen that, it was established to be able to attract, to facilitate trade, and also mitigate against investment risks like expropriation, nationalization, and so forth, which are political related risks, which are not covered by the normal insurance companies.
And who then owns it?
Yeah, it's a multilateral organization owned by African member states. Of course, the reason why I'm here is that WICA, which is the West African Insurance Association, which has a secretariat here, organized a sensitization workshop for this, because ECOWAS wanted to set up a similar institution because they felt that foreign direct investments was not coming enough into the ECOWAS countries, and they wanted to set up something similar. But since this organization was set up over 10 years ago, we've gone through the teething problems, and we're already attracting other West African countries, like Benin is already a member. Ghana has been in the process for the last 4 years. They had applied, and they were processing the application and also trying to get the final documentation, but that has not been finally concluded. But we had a good meeting recently with the Deputy Minister of Finance and in Washington while we were attending the World Bank meetings, and he assured us that Ghana would come back on course to be able to complete this membership.
I find that, what would a country do to become a member of this insurance organization, if I may call it?
Yeah, maybe something I forgot to mention is that the World Bank was involved in this, because the World Bank was the initiator, and it gave the financial and technical support to these countries. Financial in the sense that it does give a loan, a soft loan from the IDA, that's the World Bank arm where it deals with soft loans, or it could be a grant depending on the state of the country. and the countries who are willing to use this facility to be able to attract more investment, create jobs, and were able to access this facility.
But I didn't get the part. So as a country, do we just sign a paper, or do we bring some collateral and put it in a pot so that we become a member?
No, as a country, you first of all, you show intention that you want to join, which you apply to the company, and it's considered by the General Assembly. Then you apply to the World Bank for either a soft loan or a grant, depending on the state of the country. If it's a fragile country, then you get a grant. But if you are able to pay on your own the capital, then you just look for it and pay. But for this case, Ghana was given a loan for to $20 million by the World Bank to join ATI. But the paperwork is yet to be finalized.
It started in Kenya, and we all know of the Westgate saga.
Yeah.
Maybe, I don't know, maybe they did not come through you, so you might have not had any dealings, but by any chance, did you have any dealings with the Westgate saga? Or?
Yeah, we were quite involved in the Westgate. Actually, like I said, normal insurance companies would not insure political risks. Political risks, like I said, they come in different levels. Of course, the ones which are caused by government, like government would nationalize, expropriate, cancel a license, because, like you said, new governments come in, they would say this license was not given correctly, they cancel. Those kind of risks, investors insure against government. But also there's terrorism and sabotage, which is a political risk, obviously, because it's normally aimed. The terrorists have a grudge with some either government or the people. So those are also covered by political risk covers, which we provide. And we had provided the cover for the Westgates, and through our Lloyd's partners, and it's a big loss, but obviously, we are happy that we are able to, to be able to provide that money, which is going to be able to reconstruct the Westgate, and of course pay even the third party liabilities, and also the business interruption, which the mall is likely to suffer for the next 12 months or 2 years. At least they'll be covered for that.
So I don't know. I mean, if I set up a mall, I'm sure my insurance should cover me if armed robbers came there and caused havoc. I should be, have some liability cover that somebody got hurt on my premises, so therefore my insurance covers. So I'm wondering, are you conflicting now with my local insurance, or?
No, you're right. I think that's but this is it's not if it's armed robber came in and they attacked, obviously that we wouldn't be able to cover that, because definitely that is out of our mandate. But since it's terrorism, it is considered as a political risk, and the normal insurance, the company must have had a normal burglary insurance, or but that one would not cover them, because they will say that this is a political risk and we will not be able to cover it. So the investor was wise enough to take a cover for terrorism and sabotage, and it was almost close to $100 million of risk, because between the business interruption and because the loss of profit for those 12 months or 24 months is covered, as well as the building itself, and also, like you said, the people who were in the building for that time. Of course, whatever we pay might never bring back life, but at least the families will be able to have something to start with.
Just one thing I know is that it's quite dangerous to put two insurances on one product. And if I insure my mall against fire and theft and something like that, and then I come to ATI to also insure it against political risk, there might be, if these guys turn up and said, oh, we're not terrorists now, we're armed robbers, then what then happens? Who then becomes liable?
Yeah, well, if they come, if it's proved that, because that's why there's always an investigation, there'll be assessors who will come in. But the Westgate scenario is well known to everybody that it was terrorism, because people have been identified, and that. But where there's a gray, if it turns out to be robbers, obviously, then we will pull out and say this is not a risk we cover. Then I think the normal burglary cover or theft would come in, and that should cover them. Yeah. But that's how it works. Yeah, but ATI, we provide, apart from that, we were quite, like I said, involved. We're likely to pay right now, we're going to pay close to $600 million just as a part payment for them to start doing. $600 million is close to $10 million, which is going to be paid within the next 2 weeks, because the adjusters have agreed that that's enough to kind of start the process of rehabilitating the building. But in total, it might end up being close to, maybe not up to 100 million, which is the sum insured, but including the business interruption, but it might be close to maybe 70 million or at least $50 million, which will be 50% of that loss or that risk.
I mean, with countries signing on to ATO, it's not going to have the opposite effect, because then if I was coming into the country and I realized that, oh, hold on, Ghana has just signed on to this, which means they are not even sure, they don't trust themselves, they know that they might do something wrong. That's why they are signing on to this this insurance, because they know that as soon as they change government, they're going to mess me up. So won't it have the opposite effect?
No, I don't think so. In the contrary, it's going to definitely give investors confidence that because investors would like to. Africa, as you know, now is everybody's destination. Everybody wants to be in Africa because of the returns. But still, you don't want to lose all your investments at the same time. You want to be able to get maximum returns, but you want to also mitigate, because the fact that the insurance or the government has taken part in this doesn't mean that, but the government also just wants to attract, to make insurance, because there are so many investors who would say, well, I'm not going to Ghana or I'm not going to DRC, well, DRC is, knowing the situation there, because my investment might be, or Zimbabwe or some other place. But, if there's that cover, they feel comfortable and they come in. So that's the way we see it. And we've attracted, for the last 10 years, business are close to investment and trade, close to $10 billion for the countries who have been members in this. And I think the products political risk is like an investment insurance. The other name is investment insurance. Investment means that we're able to attract, even for governments, it's attractive, because governments cannot do everything in infrastructure and other energy provision. These days there's what's called a private partnership, as you know, and to be able to attract private sector into partnership with governments to be able to do this, they always need cover on some of these things.
John, let me come in here, because you see, at the moment we are protecting the investor, but then on our continent, a great majority of contracts seem to go against us, So I mean, in our country, for instance, mining laws, you have 90% repatriation, and which, if you look at the fairness, it goes against us. So is there any part of the insurance that also covers the parent country, or is it always protecting the investor coming in?
Well, I think the country is not covered. I don't think so. The country is expected, to be able to, consult and be able to be more transparent and make sure that, they seek good legal opinion in some of these things, so that they don't, end up giving out away everything. But I don't think the cover we provide now is just for investors to be able to, against them, because they are normally the weaker position, because as government, the laws, you are not forced to, to give out everything, unless you be able to negotiate if you have good negotiation skill. But investor, the weaker position, because he comes in and then he thinks that he's going to make money, and he loses all his investment. And the fact that, coming back to your question of saying that once the government invests in this, people will think that they want to expropriate or nationalize investments. But I think with insurance, just like earthquake, for instance, people take earthquake cover here. It's never happened in Ghana, but Ghana is an earthquake zone. It might happen one day. What's happening in Egypt today, nobody ever expected. It was a very stable economy. So if people say that Egypt can never happen in Egypt, then I think if you look at political risk map, which is analysis for the last 5-10 years, you'll find that Egypt was seen as a better investment destination than Ghana or Kenya, for instance. But now it's the story is quite different. So that's why it's always better to insure. Even if it's not political risk, any other insurance, you find that even your house, if you don't insure it for fire, unless you've kept. If a house costs 10 million, if you've kept 10 million aside, because if a fire gets it and it goes down, you need to replace it. If you don't have the money, you become a destitute.
So the question is, Ghana has applied for membership since 2009. you know, and still they haven't quite. I mean, how much longer before Ghana gets on board? Because we have paid a lot of judgment debts due to faulty or cancellation of contract. He didn't read it well, he didn't sign it well, and the state has paid fortunes. So why haven't we signed on yet?
Yeah, I think the story of Ghana, I think, was because, I mean, okay, the process is a lengthy process, because once, you must sign treaties with ATI itself, to say that, you want to be part of us, and these are the rules. You must sign, loan agreement with the World Bank. You must get legal opinion from from your Attorney General. You must get the signed treaty by the President, which is normally done, which you understand was done. It must be ratified by Parliament.
Which part haven't we done?
Well, I think the ratification by Parliament is what was remaining. I think Ghana had gone through most of the process by mid last year. They had done that, but obviously that the President passed on. Then you had the new President. That did not happen. Before that, it was supposed to have happened before the last election.
I'll give you a scenario.
Yeah.
There's a famous story of a man called Wyoming, who said he went to seek financial assistance for Ghana.
Yeah.
And somehow his contract got cancelled. So he sued the state and got like 52 million euros for the state.
Yeah.
So in this case, if Wyoming had gotten an insurance from you, then his contract got abrogated. You then pay him the 52 million. Do you then come to Ghana to take that money from us, or what then happens?
Yeah, that's the point. We will pay because it's a cover we have given for nationalization or expropriation or license cancellation or unfair calling of bonds, whatever it is. But we have signed. Those are some of the treaties that we were talking about, which had to be signed, because we will have the countries who are members sign treaty with us that once there's an expropriation, anything which is an action which is caused by government, then we will pay, but obviously we will come back to government to recover it. But obviously the person will get the money immediately. So the process of getting money from government will now be between us and them.
I'll take a break here, but you see, the thing is, if we abrogate our contract, the insurance will pay, but then they will come to the state to collect the money. So is that not the same thing we are doing now, because the state is still paying the money with no insurance middleman? When we come back, we'll find out how that works. Hello and welcome back. Strengthening the economy through insurance, and that's through the whole of Africa, not just Ghana. But just before we went on a break, I was speaking to George with the concept of the insurance, and he's saying that once you're covered, if any state treats you unfairly, they will pay you, but eventually they will come back to the states to collect their money. Indeed, it's fair, but that's what we are doing now. I mean, we cancelled their contracts and then ended up paying for them.
Yeah, I think the difference is that these are political risks. We believe that government could have avoided this. It's something which like particularly nationalization and the cancellation. These are some things which are within government's purview to be able to protect. If it was, for instance, like terrorism and sabotage, like the Westgate, we cannot recover from government. This one, we believe it's a commercial. We take it as a commercial risk. We will just pay the claim and based on. But where a government, otherwise, if the mechanism is like to deter governments from doing what expropriating. That's why But if we were to just allow, the governments will just expropriate and nationalize, and then you find that our capital will have gone. So there must be some ways of.
George, would you be in any way competing with local insurances within these countries that eventually sign on?
No, we don't. That's one of our mandates, not to compete. We are supposed to complement. That's why in most of the markets where we play the role of being a reinsurer. Like, for instance, the Westgate, we reinsured. We didn't insure. We reinsured a company called Ken India. And then, of course, together with the Lloyd's market, though we have a mandate of either insuring or co-insuring or reinsuring, but we only reinsure because we want to because we deal with banks as well. For instance, when banks are lending, we're able to cover them so that they be able to lend at lower rates, lend to SMEs who don't have collaterals and all that. But this one we insure the banks, but we don't compete with banks. Where the bank is, of course we issue guarantees if we can share the risk with the bank, but will not go to take that risk on our own. So basically, there's no fear of any competition, and the products we give, some of them are unique. We insure exports, for instance, exporters. If an exporter exports to international market,
I was coming to that.
Yep, and he loses, there's a default, we would pay that and we'll never recover from anybody. It's a commercial risk. We won't go to government to ask for that. So we add, apart from the political risk itself, there are no other.
Let's focus more on the export bit. So let's say I wanted to go and set up a replica of this studio in New York or Times Square. Yeah. So I'm taking investment now from Africa to overseas. Can I come to you for investment just in case the Taliban decides to attack me in New York?
Yeah. Well, as long as one leg of the, is an investment which is owned by a Ghanaian, and Ghana is a member, obviously that will be covered. One leg is in a member state. Yeah, one leg is a member state because you are connected to Africa, then that makes...
I'll be covered both ways.
Yeah, you'll be covered both ways.
Okay, and then the other thing is...
And for exports, the same. If you're exporting to Europe, I mean, the cocoa from here, it will be covered. The guy who's buying it there, if he defaults, then we will pay the claim. But we will not go to government to recover that. So that's another, and that's a product which no insurance company in Africa is providing at the moment.
What if I'm a modest mid-dress man, so I've only been told to build a 6-classroom block, but then it's only 6 months to election, and there's the risk that if these guys leave power and the new guys come, they won't let me continue my 6-classroom block. I mean, it's not a huge, multi-million dollar, but can I still come to... it's too small a portfolio to come and disturb you?
No, we right now we don't have any minimum, really. We try to, and that's why I'm saying, once we enter into a market, we try to develop, the local market to be able to take some of these risks on their own, because if it's going to be a smaller risk, then obviously it's better to kind of empower the local government, so we can just reinsure. If it's above what they can keep on their own side, it comes to us. But there's no small risk. I think our mandate is to develop, the trade, and but of course we will cover. The other thing we do, there's what's called political violence treaty, which we provide as reinsurance to companies. In Kenya, 2007, there was after the election, there was the story about the post-election violence. Most of the risks which were affected were not paid by the insurance company because they're excluded. So now we provide a political violence treaty, which now gives an insurance company to be able to sell that, so that even in Westgate there was, because if it wasn't, people had a lot of cars were involved there, but those cars, their insurances will not pay because, it didn't have that extension. So I believe these days it's important to have an extension of your treaty, of your policy to cover you against either political violence or terrorism, depending on whichever, like in Egypt and other places.
I don't know about Kenya, but in Ghana, insurance is not a culture. When you need to really, and if you look at the percentages, they are quite low, and even for local, well-established insurance companies. So you coming in new with this new phenomenon, how are you going to build a culture and get people to buy into this,
Yeah, I think that's a challenge. We know we're going to face, and we face in other market. But I think it's a gradual thing. We try to build the awareness, and of course, sometimes we get cases, good cases to justify. Like we just mentioned Westgate. That's a good case. Everybody knows what happened. So it's the post-election violence in Kenya in 2007 is also a good case, which it made Kenyans buy, what we call political risk cover, because before nobody thought it could happen. I'm sure in Egypt it's the same thing. Most people who did not have this cover might not be paid. So I think it's a gradual thing, but I believe where we have really work to do is particularly on trade credit, where people don't, in developed worlds, most people trade on credit. In Africa, as everybody trades in cash. But with kind of these policies, we will try to develop a scenario where you find that you can trade on credit and you are covered in case. Of course, we will analyze the risk to be sure that you are capable of paying. But then it kind of reduces the interest rates you pay and all that, and even for government. And
if Ghana is brave enough to sign on to this organization. How much local content? I mean, is the boss going to come from Kenya, or are we going to find the boss from local? You know, how's the Ghana setup be? By Ghanaians, or how would it be?
Well, I think the way it works is that obviously now, of course, we're based in Kenya, you know, that's the headquarters, but we have offices in the different member states. You know, for instance, we have an office in Uganda, we have an office in Tanzania, we have an office in Zambia at the moment. So Ghana, of course, will be a natural place to have an office for the West Africa market, depending, of course, if Ghana finalizes, or if Nigeria finalizes before, obviously Nigeria would want to have it. So that's also, but because we believe it's always better to be closer to the market to be able to understand the dynamics and be able to, and that's the only strength we bring rather than, because other international.
So once you're in Ghana, do you then operate under the Ghana insurance laws, or do you operate under Kenya insurance laws? How
no, we are not even we're not even regulated by Kenya insurance law, because we are a multilateral organization, just like ADB, for instance, or World Bank. You know, we respect the local laws. We work with the regulators very closely, and we follow every regulation, but we don't send our books to them. We have a treaty. We have other organs for you know, which regulate our business, like the board. We have the World Bank has a seat on the board, so all those, ADB has a seat, so they all come up with a governance structure which takes care of. We have a general assembly every year. So all that is just the same as ADB has an office here. It's not regulated by the central bank, for instance, or the governor of the central bank. So that's the way multilaterals work. But we definitely, you know, work with the local authorities too.
Are there any products that you offer that regular insurance companies also offer? I mean, obviously, political insurance, I haven't heard any local insurance offering that. But are there any other things that you offer which the local insurance company might offer?
No, like I said, where we do, there are places where, like bonds, for instance, we do bonds. Bonds are, you know, seen as financial products. But we don't do it directly. We'll insure. We just add capacity. For instance, an insurance has, because of our capital, like I told you, we are over $200 million capital, you know, authorized about $1 billion. So you find that there are big risks in Ghana here. For instance, if you're doing, you know, a project of $200 million, for instance, and you're required to have a bond, the bond normally will be 10% of that. That's already $10 million bond. So obviously the market cannot take that, so we will be able to come in and provide that capacity. Mega projects would have, but the smaller bonds, obviously, we leave those to insurance companies to do without.
How then do the local insurance company benefit? You know, I don't know if you have any tributaries that you know they can also tap onto and benefit from. Yeah,
they benefit from this capacity we provide. Like I said, we give what you call treaties. Treaties is or insurance. To them, we add more capacity because they might not have, you know, the capital might not be strong enough to be able to take a big risk. So on these classes I've mentioned, so like political violence, we can give them a treaty to make sure that they provide political risk for you. For instance, if you have a car and you want to insure it against political risk, then you can now use that treaty, because otherwise their normal treaty will not cover that. So that we do. We provide, you know, any for a bigger risk which the market cannot, you know, retain in terms of capacity, or if it's a bond, then we are able to provide that. For the banks, you know, if there's a big risk which in their books, we provide capital relief to banks, because we are A-rated. I don't know whether I mentioned that. We are rated A by Standard & Poor's, and that's the highest rating, you know, in Africa for you know, a financial institution. I mean, after ADB. You know, and for an insurance institution is the highest. So you find that even for Ghana, if we come in, we do sovereign guarantees as well. Sovereign guarantees that we're able to, if Ghana is borrowing from the international market, we're able to guarantee that loan, in which case Ghana can borrow at a lower rate because of our rating, which is A, and Ghana, of course, has just been downgraded. It means that we can, you know, they can leverage on our rating to be able to get low interest rate if they're borrowing the international market. So that's another product which we want to bring to the market.
In that case, do you go and borrow on our behalf, or how does that work?
No, we don't borrow. The Ghana would identify a bank, a lender call it Standard Bank of South Africa would lend, like a case we did in Tanzania, $250 million, which the government of Tanzania was borrowing for infrastructure. But the bank said, no, we can give you the money, but we need somebody to guarantee it, because supposing you don't pay us, the default, who's going to pay?
So then you step in?
Yeah, as a default. So we step in to give a guarantee. Together with the Lloyd's London, we have reinsurers, we package it, and then the Standard Bank will say, okay, fine, if there's if the bank does not pay, the government does not pay, they'll come to us to pay, because that's our policy, based on have an A rating, where they know that our ability to pay a claim would be, is quite high. Well, so the rates which the government would borrow would be less than what they would borrow if they're gone into normal without any security. And of course, the IMF has also stopped, discourages countries to borrow more because of the debt ratios. So they find that, but if you have a policy, then obviously that is discounted from your debt, because they know that if anything happens, that
this guy's going to pay. So it's not quite considered as a debt. Then premium. Then premiums must be huge.
No, you'll be surprised. It's not, because insurance is based on large numbers. It's a pool. Many people come in, because if insurance, the highest, of course, would be, depending on the country risk rating, DRC might be higher than Southern Sudan, might be higher than Ghana. So, but it ranges from between 2 to maybe 5%. But how much is 5% compared to, it means that, but good risk can even be at 2 to 3%. But consider the whole risk, 100%. If there's a loss, you pay 100%. So if you're only paying 3%, it's still very low compared to. Otherwise, you'd be the way it works. If you didn't have insurance, it means you must keep equivalent collateral of that amount, either in cash or So 3% is per year. It maybe takes about, I would say, 30 years or that, or so to be able to put that in money.
So basically, instead of using a sovereign guarantee, we can come to you.
We normally give sovereign guarantees in lieu on behalf of governments, so that they don't have to give their own. They only give us a letter of comfort or whatever. But that's very common, because all these PPPs and big projects on energy, governments have to, the lenders would normally require a sovereign guarantee. But again, if you're working with us, then we'll be able to, to avoid, giving that guarantee, and then your ATI will be. And obviously, again, like we said, if there's a non-payment once we pay the claim, then obviously we go back to the government at some time to try and recover it.
So far since you started, how healthy? How have you seen? Do you see potential for growth or stagnation? How have you seen it?
No, I see there are a lot of potential. Like I said, in Ghana alone, since the last 3 years, when we said we were lucky to be in Ghana, we've got over $1 billion worth of inquiries people want us to insure. The Tema oil or some oil and gas risk, cocoa, and for non-payment. So and obviously Africa, as you know, is a destination where everybody wants to be now. So there's more inquiries because everybody wants to cover their back just in case. But
are there some countries that you will blacklist and say no, as for this country, no, you need to put your act together, otherwise you're not coming on board?
Yeah, so far we've not done that. What we've done is that we have country ratings. We charge more for different countries, but we've not. Of course, we've had issues at DRC and a few others, Southern Sudan. But basically, it's not been as bad as it is, because Africa is more of a perception that the risks are bad. But of course, it can happen. But so far, it's been good. So we just differentiate by the rating of the country. We will charge other countries more, and all others will be charged less based on economic analysis.
And West Africa, within the Africa, you have the southern, eastern, western. Where is the potential? Where is the growth now? Where are the inquiries coming from?
I would say that initially people looked at North Africa as a stable place, but now what's happening. Everybody's running away from there. I would say East Africa has done very well, in terms of, you see, part of what we do is to trade and, invest. We try to ensure trade. And because of regional integration, is happening more, you've heard about the new tripartite tripartite agreement between the COMESA, East African Community, and SADC. They want to come together to form a tripartite group. That is going to be almost half of Africa. And once trade barriers are broken, the trade within these countries will increase, and that's how jobs and will be created. So in ECOWAS, I think there's been a lot of effort also, particularly on movement of people. But I think they still need to do a bit more on integration in terms of trade, and because inter-African trade is very low, and you find, though like I said, in East Africa, I think trade between Kenya and Uganda is really increased. So now Uganda is the highest trading partner to Kenya compared before it was Britain. So those kind of dynamics are happening now, and I believe going forward, we'll see Africa trading with itself more. But of course, we need to do the infrastructure. We need to do make sure the cost of energy comes down by all the bringing all sorts of facilities, and that's why our guarantees come in and ATI comes in.
I'll take a break here, and then when we come back, I want to find out, once you have signed on to this, how do you comb your contracts before you pass it? Because otherwise, it might come back and bite you. We're coming back. Hello and welcome back to this exciting conversation, strengthening the economy through insurance, and it's throughout Africa, not just Ghana, and it's Africa Trade Insurance. It's like an insurance organization where all African countries come together and agree on certain principles that, yes, we do A, B, C, D, and based on that, African Trade Insurance is going to guarantee that whatever business comes into our land, if anything was to go wrong, they will pay up. Now, here we are, George, and there's actually a sole commissioner now set up in Ghana. And all he does from morning to evening is looking into payments that were not supposed to be paid. He supplied cars and the government changed. He built houses and the government changed. He did this and the thing wasn't signed right. So if Ghana eventually gets on, and I need to go in depth why Ghana, because it's like common sense, because the state is losing huge sums of money. Anyway, so does it mean if I came to you and said, well, Ghana owes me, $2 million for something I did which wasn't right, you then now come to scrutinize the contract to make sure that everybody played their part?
Yeah, that is even before if for instance we were insuring an investor, there are some risks where we will definitely have prior contracts. We will see that.
Sorry to interrupt. In that case, before you insure, you need to see the contract first.
Yeah, in some contracts we need to see the contract to be sure that as long as contract is legal, then we are fine with it. But obviously, if it's a contract which is not legal, obviously there are issues. But we need to look at.
What if it's legal, but there's loopholes, and you're thinking, these loopholes, you could be pinched, and when you're pinched, is our fault.
Yeah, if that happens, of course, like I said, we look at the investor as a weaker position, because the government is the one who is the drafter of this, of this document. And normally in law, if you are the one who drafted the document, it goes against you anyway. So for this reason, why we will take up the risk. If you are covered by us, then we will now sort it out with the government. Yeah, like I said. So that's the tricky bit about it. But this sort of, not only it's not only Ghana where this is happening. I think we have cases, in Kenya and wherever, with this kind of things, particularly where, contracts are just, governments being sued for billions of money because of, the contract, the new government. Some contracts are validly cancelled, but not valid. But at least once a contract is a contract anyway. But some, of course, the government will come and just cancel because they want to give their friends or new people, and those are kind of the risks we see, on the table.
See, another thing which automatically comes to mind is that countries who will sign up onto this federation would automatically be very, very cautious in all their dealings. I am wondering why since 2009, because are we saying by the time Parliament finish their deliberations and come back, all the agreements you said and agreed to do in 2009 still stand? I mean, the dollar rate is not even the same anymore. I mean, or do we then go back and start afresh? How do we get this to work?
I think we've been in discussions still with the government on this, and I think they might have to go back to the World Bank and let it be restarted. This can still be salvaged, but of course, in between, Ghana has also migrated from to middle income, so it depends also now they might need to, but I'm sure they'll be able to still talk to the World Bank to be able to get this thing restarted at the old rates rather than the new maybe interest rates based on your new status, as it was before. So it's unfortunate that it wasn't finalized on time, but I think it's still worth bringing it back, and whatever it's worth. I think it's still very important, and for Ghana, particularly at this time, to be a member of ATI, particularly now that, like I said, all the ECOWAS countries are trying to join, and some of them didn't even know about ATI until just last year.
George, compared to the countries who have signed on and compared to countries who haven't signed on, is there any statistics to prove that countries that have got our backing seem to get more juicy contracts or more interest, and those that have not signed on, I'm not saying nobody goes there, but do you tend to feel there's more business confidence there? Or
No, I think it's the way to look at it is different, because there's still opportunity. Even if you don't sign the ATI, you can still place the business. But I mean, you can still get, because you can not get investors, some investments, particularly on oil and energy, or even infrastructure. Some of these big mega projects, they'll never come without insurance cover. So they might have to go to the London market, the Lloyd's market, or go to MIGA, or maybe some of the bigger other institutions who don't understand Africa very well, and they will charge you more for it. So you might still do it, but you will end up paying. I mean, the government or whoever the sponsor of the investment will pay more, because those guys look at Africa as a very bad destination for investment. While we in Africa, we understand the continent, we understand the people, we're able to work. Of course, like I said, the board is made up of some of the people in the government who would represent each country. So if there's a problem in a particular country, we're able to unlock it, and that makes our rates much more friendly than it would be for. So the difference here will be the cost of having that investment will be higher.
George, then maybe that's why Ghana is dragging its feet, because they're thinking, well, if I come on board, I still have 10 investors. If I don't come on board, I still have 10 investors. So what if there's nothing that we are missing on? Why should we come on board?
Yeah, but that's what I say. But you will be paying more to get the investors on, in terms of premiums and all that. You'll be paying more because the international market. Some of them are not even touched. Like I said, we already have issues.
No, but the insurer, the investor pays his premiums and not us as a state. So as a state, the economy,
but in a way, whichever way, there's always, there's no free lunch. I'm sure there's somewhere where whoever is, if it's a contract, I mean, he'll definitely make sure that he's doing something for government. He'll charge more for it because he has to build in his costs. So it's always there. And I think, like I say, Ghana has had issues. There have been some default in the international market, so some of the London insurers are not looking at it very keenly, but we trying to, when we were involved in a risk and we go into the international market, if it's a bigger risk and we want to reinsure it, they feel more comfortable with us because they believe that we will be able to unlock any issues if they arise, so they will charge less for that. So it's, I think in a way it kind of opens up more opportunities than if you're not a member of ATI.
Within Africa, is there any other insurance company doing what you're doing, what African Trade Insurance is doing?
No, not within Africa. We have competitors, but out of Africa. Lloyd's Market will do it. They're based in London. We have we have MIGA of the World Bank, based in Washington. We do political risk, but MIGA does not do trade credit, which we do, which is like non-payment risk. They only do the political risk. But of course, most Western countries have what they call export credit agencies, which are their national companies. Like for instance, Italy, if the Italian government, Italian investor is investing in Ghana here, they have a company called SACE, owned by 100% by the government, who will ensure the political risk for SACE here in Ghana. And of course, you have China has Sinosure. Sinosure will ensure the political risk for Ghana. But you see, those are just for those countries who are investing. So if a country doesn't have an ECA, they will not be able to. They must have a content, kind of Italian content, or Germany. Eurohamis will do that, because if Germany, investing here or trading here, then they will be covered by the German export credit agency. But so the point is that they would be able to do it, but they might not be able to do for all non-Italian context. So,
George, now I'm looking at ourselves as Africans.
Yeah.
And, within the continent, we have a very westernized mentality, and we always believe West is best. So that if an African got a $7-10 billion contract, they might pick up a phone and call Lloyd's and not call you. So how do we then make them understand that, you can do exactly what Lloyd's would do, and indeed is African, so, keep it at home.
Yep. Yeah, that's the thing. That's what we're trying to, make people aware. We are reaching out. Like I said, you rightly said, we are rated A, stable by Standard & Poor's. That's the highest rating you can ever get. Not even in Africa, even internationally. We're even rated, higher than some of the international, even those ECAs I've mentioned. Some of them are not even rated at all. So it's something we need to work on, and I think it's something which is a problem in Africa, where people don't believe in ourselves. But I think we hope we'll be able to change that as ATI and other institutions which are coming up in Africa.
I mean, A rating is fantastic, because I know the rating is very, very stringent. And so between 2001 and now, what is it, or what structures have you put in place to have such a rating?
I think there are quite a number of things which give us this rating. First of all, our capital is very strong. We are having a $200 million capital. Of course, in the African standard, is quite strong. We are also supported by very strong institutions like the World Bank and ADB, and recently the European Investment Bank. The European Investment Bank wants to work with us in Africa for renewable energy. So we're going to be the focal point for all the guarantees for renewable energy in Africa. How everybody now, about how the issue of barima, the power in Africa. America is also, so energy is where everybody is going now. So if European Investment Bank recognizes ATI as a partner in this, it means that we really have something to offer. Otherwise, they would not. So, and those are areas where even Ghana would benefit if we become members.
How many countries have signed on at the moment?
At the moment, we have 10 countries. We have about the 10 who are the pipeline. Let's say 5 who were in the process. Sierra Leone has just applied, and Ethiopia. Yeah, so Ivory Coast had actually was with Ghana and Benin, but they were dropped because of the war. But they've started the negotiation. So those are 3. Mozambique has just sent in a letter. But then ECOWAS, of course, like I said, ECOWAS, they're going to the heads of state next month to ratify the joining of ATI. So that will bring about 15 countries, on board. So I believe in the next 2 to 3 years, I see ATI having, half of the countries. And of course, the vision is to. The ultimate is to get
South Africa
all the countries. South Africa is not on board yet, but we hope that they will come on board sometime. South Africa has something like a political risk insurer, owned by the government, but there's, like I said, the way the Italians have their own, but obviously they will only do South African investment. They will never do any other investment. So I think they feel they should be part of ATI. So
before we wrap up, what... As the Africans say, what is in it for us? What is in it for us?
No, I think what is what is in it for you here, I mean, as Ghana, I think is that ATI would bring a lot of comfort to investors. It will be able to allow banks to be able to lend at a cheaper rate, to people. SMEs will be able to benefit, exporters will be able to benefit, and of course the insurance industry will also be able to benefit, because there'll be new products which they didn't able to do, like terrorism and sabotage. There'll be political violence will come on board, and the government will be able to benefit also on borrowing. If they're borrowing in the international market, or the commercial market, they'll be able to borrow at a lower rate if they partner with ATI. So there's something for everybody, that's how I see it, from exporters, for insurers, for bankers, for manufacturers, for the government itself. Yeah, and of course, that's of course,
But then unfortunately we need to go back to the drawing board all over again.
Yeah, it goes with employment and opportunity for growth in both infrastructure and energy.
Well, George, I want to say thank you very much. And thank you very much to viewers. So I was talking to George Otieno, who's Chief Executive Officer of Africa Trade Insurance. And he's been explaining how the whole thing works. And I think it's a fantastic idea. The bit I like is that once you sign on, you as a company or as a country need to make sure that whatever contract you give out is so fine that it doesn't come back to bite you, so you don't pay. So I think we should urge and get everybody to get on board. Thank you very much for watching. My name is Nana Sakwa, and tomorrow we'll be back to do it all over again.